Alrighty, folks. Good morning. What's going on? Happy Thursday. Got some interesting news overnight. Starting with some Russia. I don't really know what you want to call it, but they are selling off about 119 billion dollars due to a lot of sanctionary sort of forces, which you would think would cause some sort of move. Dollar barely budged, and it's actually gained a little bit, which is basically the opposite of what I would say would be going on here. It sold a little bit overnight, and then this is today's candle coming in right now. If we look at on like a 2 hour here, you'll see the change through here. Pretty interesting. I don't know if this helps us with anything, but we have been looking for some sort of flow from an international sort of standpoint of when money is being converted to the dollar, for instance, right, which would be the opposite of the situation, to then be buying U.S. equities. This might give us a little bit of information as some of those things actually come in and happen, whether or not we can actually use that sort of correlation. The reason why I bring it up is because it is sort of an important metric, or at least a correlation that is close enough to being, we can use the word correlation to it, that when the dollar pushes down, money's being pushed into the equity market. We are at a bit of a point here where it needs to either come off this low or break further down. Right, we've been consolidating at a low. We know there's support in here, but we haven't really seen much action. But the equity market's been kind of flat as well, right? So it should be interesting to see if any of this influx of dollars makes a difference, and it might give us a number in terms of how much it will actually take to move the dollar. Because if 119 billion dollars is sold off and it doesn't budge, then that might tell us that, okay, when we do see the dollar move, that it's a significant amount of money that's being moved all at once, right? And we can usually find out why, because this, for instance, is made public by government. In the other times, it's just investors, right? All sort of together doing something, sort of like the memers, right? All buying the same thing, driving prices up. So I thought that was interesting. The other side of the coin uh, is the treasury market with that move. We did see yields rise on 10-year. It's at almost 1.6 right now. Um, it didn't really move too much in terms of some of the dollar stuff. So again, doesn't seem like there's much action there. Yields are up again. If you saw, claims are down below 400,000 for the first time. Again, people are going back to work, and less claims. We've seen that the market is not a big fan when people go back to work. So interesting, obviously interesting pre-market action come from that. I see no relation, right? That there's no relation between claims being down, so pre-market's down, market's down because we've had very hot week to start with retail tickers putting a ton of points on, right? Or if we take a look at what's down this morning, um, most of the meme stocks are down, right? Most of the meme stocks are down. Now, AMC did an offering and is now actually being bid back up. Now, we can make as many jokes as we want. They're doing quite a hefty offering, 11.5 million shares, and it's not even budging. So it's opening about 1% lower. Now, again, there is no, oh, here's how far it's going to go or the timing or anything, right? And so there is nothing really to be done here. You can day trade, scalp, have fun, right? There's nothing wrong with that. But in terms of actual value, anything like that, if you saw, AMC is now worth more than half of the companies in the S&P. That's kind of strange. And my new favorite graph or chart is when you compare AMC to Zoom and you do this comparison, that orange line is Zoom. That's what this graph looks like now as a percent gain. You remember about Zoom and Zoom conferencing? Well, did you know that movie theaters are now, AMC specifically, is now up about 1,700% more, or whatever the hell it is, 700 something percent from the low. It's like 2,000%. Yeah, that's the thing. You can't even look at this chart because of how ridiculous it is. So that's a real thing, by the way. Uh, and so it's obviously quite amazing. When we look across the board, most are down. Triple BY down about 10%. When we look at the numbers, for instance, yesterday was a 62% gain, 10% is nothing. You start to go through some of the others, things like BB are actually gaining on the morning, which again comes back to this very uh, sort of interesting topic of when things are being bought, everything's being bought, and it's not just one. So it's not just AMC being bought. We do have every single one of these tickers gaining together. We continue to see that. It's important that we look to continue to take advantage of those that have not moved as much, right? They might have been coming off the low. And so you see a lot of the charts I posted last night that I'm posting big lists of usually just to update targets. So that's why I didn't throw a bunch of charts out for all of them. Most of them, again, are the exact same pattern as all of the other charts we've seen, or they're sort of a meme stock that we're looking for trajectory and looking for bid. Most of those are kind of up this morning. So things like Ride up 2% here. When we just think about it, right? If we're getting bid exposed across the market, across meme tickers and across those that are in this, let's call it growth state that's not going to gain right now, and we know the market's in a very value heavy sort of mood, then these sort of tickers will get bid from retail, and we know they can get momentum there. And so we're looking for these tickers to basically come out of the low, and there's a lot of room to gain. And that's the biggest thing, is that everything is so technical. None of these moves have been obviously fundamental or anything like that. Obviously, there's a lot of memes behind it, but most of these moves are very technical. It's that there is no resistance above them. There's nothing to stop the move once it gets going, right? And that's the biggest thing. And so when we look for new opportunities, most opportunities are very easy to find. You find something that has no resistance above it, that has shown that it can get momentum, and it's a part of a sector, or it's a part of an idea that can catch. And that's all you need to find. Because if you take a look, price moved through here pretty quick, didn't it? Well, it's pretty easy to move through there once again, right? Especially when you have this phenomenon across the market. And so it is important that we do not shy away from a lot of the plays. Obviously, we got involved pretty early, but it's really easy to just forget about it, because when we start to look at the others, obviously there's no real way to get back into most of those. That doesn't mean the idea has faded, right? We can use those ideas for other charts, and we will continue to do so. So if we see something during the day and it's making a move, as long as we're not out there chasing momentum, and we know the limit, right? We know we need to get out early. If there's any sort of weakness, some sort of pullback, anything, we're not going to test it, right? It's not that we're going to push our winnings, right? We're going to protect the downside every single time. But there are gains out there to be had, right? And so we need to continue to press that sort of advantage of looking at everything and finding everything, so that when something does start to happen, we can take advantage of it early, sell to the people that want to start to catch the momentum, right? That's the usual story, right? Uh, we're buying early enough so that we can sell to when everyone else wants to buy, right? That's always been the name of the game. So we'll see how the meme stocks do today. I obviously think that, or I think everyone thinks that, by the end of this week, a lot of decisions need to be made. It's pretty. It would be quite the ride if we continue it into Monday next week. I just don't. You have to stop a little bit, right? And if we even go back to January of last year and we look at the market in this area when we had the meme stocks going, the market traded flat, right? And nothing really went on here. But we did, when coming out of it, start to have some volatility sort of repercussions, right? And if we go and look and compare this to the spot VIX, which we've talked about for a long time, and the VIX has not given us anything. Not given us anything. But if we look in this area, right, and we compare a little bit about how volatility worked. So here's volatility back in the whole meme stock area, right? A lot of this predated any moves on the market. And also, most of these charts were almost identical to the volatility index. Now, things are different. They are different, but it is a very similar sort of idea. if you take a look at the spot VIX, it is not moving in any sort of correlated way with the meme tickers right now. And I think that's important. Now, again, we have noticed that the spot VIX has not been moving sort of in a proper way, as we would say. It's not doing anything. It sucks. I call it, it sucks ass, literally. Now, if there is something, though, wouldn't you think that we would have a very similar sort of story on the spot VIX if some of these things were going to be similar, right? And this is where it's very possible we get this spike to come in on the spot VIX when things are about to get sort of pivoted from that top, from the high. I don't know what it looks like, but I know what it looked like back in January, right? When we, again, if you go look what happened in January, this is January. And that's when that big peak came in on all of them, AMC as well, right? I care about it less for these tickers and I care about it more for the market because during that time, we had sort of options heaven if you were able to get in at the low because the volatility was completely whacked. And what we like to do is buy when the VIX is high, right? And so when that VIX was high, right up in here, when that was at the high and we were able to buy through a lot of this, even though the underlying prices were not going up, we were getting significant discounts on options, specifically on the long end when we were going long. And I've been talking about this for the last few weeks that when volatility is high, at least in a short-term sense, short-term volatility is high, it allows you the option to go long. And it actually gives you, it's less of a discount, but it's more of a discount in the near term because you have no exposure to the near term. And so if there's volatility, it's not causing those premium prices to go up, which is usually what volatility does. Usually all we talk about is the IV, that is the premium level. Implied volatility is literally what gives you a premium on the options, and that's what you're paying for. You're paying for volatility. But when things are volatile in the short term, they're discounted into the future because long term has different volatility, right? We usually talk about how volatility climbs in the future. Well, it's kind of hard if the volatility is peaked at the moment to then say it's going to be higher in the future. No, we would say it'd be lower, right? And so that actually causes prices to decrease, which as long as we're not buying too high into when that price is decreasing, we can get a very nice low position. It's possible that there's a lot of people attached and that we could get a market-wide sort of spike in vol again. We haven't seen it very recently. I mean, we had a spike here, but it was pretty phony. It was a pretty phony spike in May. And it's just something to keep in mind because if we do get that weird surprise here where these things line up in such a way that the market pulls back into support, volatility spikes very heavy, like in January, then we need to put the pieces together and continue with our mentality of buying on lows, but in understanding that we're actually getting a different price because of the volatility, right? And so those things added up, add to a lot of different things that are going to look weird, just like it was very weird in January where we had no idea what the hell was going on, media attention, everything else, right? And it's so many games, right? It feels like everyone's playing a game. As I said yesterday, we're not playing a game, right? We can have some fun with it. What we're doing is being consistent, disciplined, and using our strategy, but understanding that some things change, but we need to take advantage of it, right? Through our lens, right? And continue to, again, buy on pullbacks, understanding that it may look different. At that moment, it might pull back over here or something, or we break out when volatility is getting very high. Understanding that if we're traveling towards all-time high, volatility spiking does not mean that we're all of a sudden going to be, popping a bubble or something, or we need to have anxiety of losing a high, right? Those things are not, they're not related, right? They're not related, and so we'll see how those things play out again. So 2 days here on the week. I think we make the decisions this week on a lot of those, and so if there was a vol move, for instance, it would be today or tomorrow. I do expect us to be bid going into the weekend, no matter what. If we look at the overall, even though AMC, yes, is worth more than basically half the S&P companies, these meme tickers all together do not amount to much of a market percentage, and it's not much money overall. Again, this is just sort of a momentum high spread situation. So if they all do come down, it does not mean the market can't continue to rally. We're rated all-time high. In terms of our positions, we're very good for long term, right? Coming from the low here and coming from further lows, we've continued to trend up. Market's been pretty flat. Market's been pretty flat. Most important areas, again, are sort of our benchmark sectors of banks and energy. Energy continuing sort of this it is a bit of a rally coming from a consolidation down here, but it is a little bit more volatile than the rest, and we know that. There's a lot more factors involved. But 2% yesterday, barely losing any in pre-market is a very good sign to get out of this area here and continue this trend. Again, sort of the most important sector to be a part of. It's 50% ahead of the next, which is banks, right? I mean, when something is performing this well, you don't get to go, well, I mean, it's performed so well so far. It's probably done. No, that's literally the exact opposite of this situation. Again, think about what exactly is going on. Even though, again, the economy can only reopen once, it's not a reopen trade. It's inflation, right? The way inflation is going to work and the way that the supply is going to work on this side, it's going to continue to be removed. It doesn't matter if demand peaked. Supply will continue to get removed from this chart and it'll continue to climb until said otherwise, until something drastically changes, right? Now, banks have seen a little bit of different story here. They've continued to trend up with higher lows, with less sort of volatility, right? Now, we've seen individual banks play a lot of different sort of roles in the overall average. We look at things like Bank of America. I posted, for instance, the candle from last night. These charts are all sort of, the flow is interesting, right? The flow is interesting, but they're all very bullish still when you look at them, right? It's really easy to get caught into saying like, well, they look kind of slow. They don't look like they're doing much. JP Morgan looks slow. JP Morgan was moving very slow. Yet it doesn't even matter. It still has put a significant amount of points on for its size, right? And that's where the size question comes in. It's important when we're looking at percentages to understand the percentage is based on the size. And so something that went up 1% may be more than something that went up 10%, especially when we talk about options. It's not the same. It's not the same to say that your 1% gain on Apple is the exact same as a 1% gain on fucking Orange, whoever the hell that is, right? It's these companies here that right now pay. And even though the percent gain is not that large, and I've used this example for REITs, for instance, right? Those charts, they barely move, right? But they offer consistency, and options love to have a nice consistent return as long and it's climbing on a trend that's more volatile than its average. These things that are trending like this are just significant, right? And you can push it over more time. The longer you push something, the more of a gain you're going to get. You do get a gain every single day. So when your lows are higher every single day or week to week, right? You are gaining from every single one of those moves. So maybe every day you're gaining 5%, 10% on your options, right? That adds up to a lot of damn percent. And so again, these two sectors have been the most consistent in offering that longer term return, which is where we make the majority of our gains. We do not make the most of our gains from making a weekend trade that pays us 100%. That has never been the case. It's nice to get those. It is nice to get those, but there's never a situation where you put your whole fucking portfolio on one of those trades, because then the chances of losing it are pretty high, right? And so it's, again, these areas that we need to be consistent on, continue to push these positions, and when you get out of them, get back into them, right? You cannot allow yourself to be saying, well, you know what, I just sold at this high here, and I don't know if it can go any further, These things, those are just emotions, right? There's literally nothing there that it doesn't even add up, right? What was the point of you being in the first place when it was doing the same thing, right? So be consistent with these trades. There are other sectors here with the value trade. We've talked about industrials and the like. A lot of them are a little bit more volatile as well, but as long as you're going on a risk management standpoint, protecting downside over anything, and you continue to take these trend trades, I think that is still the overall best position. and especially coming out of, if we do come out of the bit of the meme economy right now, it's important that if we get a jerk back, right, some of the flows return. I'm sure most of the big players have been playing the game over the last, over the last week or so. It's important that you're in those positions for when that sort of flow state goes back to normal, because that is the trade, right? The dirty Dow, for instance, right? It's a terrible index, but for instance, this will go back to that trend, and it has been continued, right? And so this is where you look at this index compared to the rest, right? These things have just continued. It's banks, energy, right? It's literally just those benchmarks, and the rest of, again, the rest of those sort of value tickers, that it's this blue chip idea that has taken over. We've seen the boomer numbers. We've seen the dead people numbers. They're investing in blue chips. What are we gonna do? I mean, it's boring, but what are we gonna do? They want dividends, right? People don't want bonds. They want equity dividends. They want to hedge their blue chips with growth, and then they buy things like Apple, right? So I mean, what are we gonna do? When they want to buy that shit, then we'll have to buy it. Like, what else are we gonna do? They want to pay us for it, then okay. Now, it's not pretty on the average right now on the tech side still, but again, most of the growth attention is in meme tickers. It's important that we continue to be sort of hunting on mega caps, and I've obviously, continued sort of that rhetoric of growth is never going away. Tech is still always going to be the sort of the biggest gainer every year. It's through 5 tickers. It's through the mega caps, right? That's literally it. None of the other ones matter. It doesn't matter when we look at the sort of, if we look at 2020, right? And you see things, you see things that put like a 700% gain on, that like CrowdStrike, right? CrowdStrike put 750% on. No one cares. Nobody cares. No, that's not what actually moved the market, right? It's things like Apple that, again, you're getting a chance at a low. Okay, right now it's not getting the flow because a bunch of memers are buying a bunch of meme stocks, and those people that you would usually be buying growth are not here. Are they never coming back? Are they they're gonna take all their meme stocks and run? Like, did they do that with crypto? Did everyone go into crypto and never leave? No, they literally all left crypto to come buy equities. Are they gonna keep playing meme stocks forever? No, they're gonna come back to the mega caps. That's what's gonna happen. So when we talk about the other side of our port, this is it. It's through megas. Specifically, I've talked about how I like Google and Microsoft for acquisition reasons, right? Those two are big on acquisitions, and the market's paying a premium for companies that can acquire others and have the cash to do so. Mega caps are obviously they have, each of them have over 200 billion in cash. Excuse me. Apple is spending over 400 billion in the next 5 years, right? These kind of things that we've talked about, like, it's an insane amount of money. The other being Facebook, which is the sharpest of the bunch, which we have seen lead out of any sort of pivot, out of any sort of pullback. We've seen Facebook be the leader here. You know what? Facebook sucks, right? Facebook literally sucks. And there's a lot of reason not to like Facebook. But this chart is the most technical fucking thing in the world, right? There is literally nothing here that has any fundamentals written on it, any sort of ideology. There's nothing here in terms of regulation. It is the only chart that doesn't give a fuck about anything. And it doesn't make sense. It literally doesn't make sense. But we've continued to use this chart to be like, oh, here we go. Mega caps are coming back up. Facebook would lead it by a few days sometimes, right? And then we would see things like Snap and Twitter start to make a move as well, and we go play this game, right? And so, again, we can use mega caps, right? Twitter coming out low. It's important that we understand that these are the only things that fucking matter in the market, right? They are the driving force. Just like when we talk about on the value side, things like energy and bank, they're the only thing that matter. Banks are literally the only thing that matters on the inflation question in terms of a market-wide change because, again, of interest rates. Other industries don't care about interest rates. They don't. It doesn't really, yes, it discounts their growth because the cost of capital goes up if yields go up in the bond market, right? But that it doesn't really amount to anything overall, right? To banks, it does. And so that's why we use banks for buying, right? And so understanding what matters is obviously an important thing. Just like why we talk about, there are a few things that we need to know, and we keep it simple, and we use those and press our advantage when we can, push our winnings when we can, right? But we keep things very simple. It's pretty simple, even though we have a lot of bullshit around us. Apes stay strong, but at the end of the day, none of those things matter. Right? None of those things matter. So we stay consistent. I've had a lot of fun. I think it's a lot of fun. Obviously, I think the market's been, you could call the market boring. I find it very interesting, but I understand the boring nature of sort of being in the exact same area we've been for a month or so. But there's a lot going on in there, right? And obviously, the injection of memes is always a good thing. So, what can we do? Then when they leave us again, they'll leave us, But I'm sure they'll be here to stay, right? All of you that you're worried about your memes. Let's see what we get for the open. We're down 0.5% on S&P. Nasdaq's down a little bit more. Dow is doing a little bit better. If we look at other markets, Europe's down a bit. Asia was mixed again, coming off some different things, but Biden did sort of alleviate the China troubles with listings. So again, we had sort of Trump blacklist. Biden doesn't want a blacklist. You would think that Republicans would have been more free market, but apparently the Dems are more free market. But either way, it does look like we're going to be opening up the floodgates for, not that they're not already here, but that did not move the China markets is the point. So everything's pretty mixed. So we're looking for us to sort of start the move again. We've been trading flat. We're still in support. We're actually in between a range. It's not many points around here, so let's see what we get. That looks like a lot of bid to start. Definitely wouldn't mind the old bidder. I think you're gonna see my mouse on one screen here again. Okay. What do we get? Now we could have a bunch of sleepy traders today. Have a bunch of sleepy traders going into Friday. And again, this goes back to, we've seen the market, besides the meme stocks, we've seen the market turn into this more weekly focus, and you basically wait until Monday to do anything. And so you digest through the whole week, see what's going on, and then on Monday you go and place your orders, or on Friday you exit, right? Maybe Friday you exit anything that you entered that week. It didn't work out, whatever it is. We're going to continue to look for that. We have seen volumes be higher because of the memes, but it's hard to then gauge the rest. BB is holding that 30% gain up there. It looks like it's about to go to the moon. Ride. It's jolting up there, but okay, over 8. So again, putting into perspective, just these other tickers will continue to look for moves. They are absolutely connected to what's been going on, right? Volatility is always connected in some way. It's going to get there somehow. It's not random, that's for sure. Looks like growth should be able to, we're down 80 basis points on the Nasdaq. It feels like you probably should be able to pair some of those. Probably get back to break even on the day. Again, everything's dictated by these megas, things like Apple here, causing some of that. But you've got a lot of support down here. We've seen this whip up off the low a ton of times. Those of you that are not in this position, I mean, I would just, this is more of a Friday trade to me, but look at how tight you are in here. You have a higher low. You can take the trade right there. I'm already in the trade. You can take the trade right there. It's more of a timing thing, because again, you need to take into consideration you're open tomorrow. You don't want to get stopped out for no reason. So that's the only thing that would hold me back from taking that trade off the open, or at least your first few candles pull back, look to the upside, start to recuperate some of the loss. Ford had some interesting pre-market action. I don't know if anyone saw that. up 1% right now. It was down about 1%. Let me see if we can put the after hours. There you go. Some nice bid there. Coming up off the start. Sure, there was something related there. I just didn't read. Well, that looks pretty good. That's continued to be a very nice trade. Very nice. Right? That has not stopped, by the way. There has been no consolidation. So we'll have to see. We're coming up to the trend line. We've talked about the trend line. I mean, we'll have to see. I mean, is that the high right there? We're hitting it again. It's hard to tell. If we get some sort of breakout through there, then I guess we'll know. For now, I don't think anyone knows. Not much else going on here. Ride does continue, so working out. On the sell side, let's see. How are these bad boys doing? A lot of volatility. Gold has obviously been making some interesting moves. I should have mentioned that from last night. Gold went down 1% from last night. Can be tied to the Russia situation selling dollars, most likely for gold. Russia is a sort of a haven of gold, but we basically own the entire gold market, so it doesn't really matter. Their percent treasury of gold may be high, but we own basically all the gold. So by we, I mean the United States. All right, nothing else interesting. Staying pretty flat. A lot of break even. A lot of break even around that 0.5% like the average right now. Here comes the apes. That didn't take long. Here they come. Oh, here they come. Space is very intriguing still. Obviously, this entire situation has given this chart a gift, right? Coming I mean, how tied is this into the meme stock is the biggest question, because if this is only going up because of the whole meme economy thing right now, then that's quite the short right there. I've thought about it. I've thought about it. To put into perspective a little bit, these levels here are very close. So you can see this is not even 0.5% from the support, and this is just 0.5% up to the resistance here. So this range is only 1%. 1% is obviously nothing in our market. And so it's really interesting, again, to see how close we really are in terms of pricing in here, in the ranges. And so, again, if this pulls into support, there's nothing wrong with that. There's absolutely nothing wrong with coming into support. And that's exactly when we want to get frothy again, right? If you have new positions to put on. These are very specific. It's not really value-oriented, but keep an eye on. GM continue looking good. Again, Ford, related with Ford. Corsairs holding the gain from yesterday. That's nice. It's hard to tell. Some of these smaller growth companies are not going to be able to hold big gains. That's just the reality. People don't know how to. I mean, who's buying some of these things to hold it for long term? People are trying to take advantage of right now, right? They're not. They're looking to flip it. They're not looking to do anything with it, right? And so it's hard to find some of these that are going to continue a trend. That's the reality, right? That's where the whole mega cap dynamic comes in. It's like what else is actually going to hold long-term value? Probably nothing. Z still doing nothing. How are we doing on travel to start the day? Holding. Dead center. Did over 4.5. We're down 2. About historical. A very nice looking chart still right there. That should not be killing anyone's options. Wind pulling deep. 131 right into the level. Looks like it broke. Got a little bit of an error down. I think it might be able to hold in there. Definitely a more interesting move there. That's also a nice, I would say that this is a buy area. I'd put the buy and hold button together right there. The win chart. But obviously volatility, take profits. You're seeing it on the volatile sectors right now. Small cap, similar move across. Looks like everything wants to pull down into support here across the market. Hard to tell the timing though. Are we actually going to do that? You have 5 minutes left on your 15. When do the boys lose the juice? Chart, this is stupid to look at, I swear. They're all the same chart. At different percents. Hot stock's not really on. They got nothing. No bid. Everyone forgot. Upgraded eBay. Stick with the good stuff. That's for sure. All right, let's take a look. Let's take a look at the old megas. See. Apple down 1%. Pretty good spot. Chart is ugly as hell though. I'll tell you. When you look at the moves crossed, significantly different. Significantly different. Amazon's gonna be hitting support very quickly. Now Amazon is very much in the Apple boat. Both are significantly down from highs and have the most upside. Most upside. And they're not, certainly not ahead of our value positions whatsoever. You can see all these have barely moved. Most are looking to head to the upside, so. Is there anything else to do? Probably not. Probably not. WBT has still held that move that we saw, which is pretty damn interesting. I'm not sure how you hold some of those gains, but okay. I was wondering, is something. So we have some of these charts, right? BRKB probably the best example. that significant trend for months and months, started this new sort of consolidation in here. These are your charts that for like when we talk about value and everything, right? And we talk about making it now, right? These are your ones that if you haven't been a part of, that you're getting a new chance on, for instance, right? Now, where exactly you are is a question. But I think you're coming out of some sort of consult. I mean, there's just a ton of supply in here. You've got a very nice trend, right? I think it's probably pretty damn good in here. About the same. I think BRKB, that candle's a little wonky, but that's basically just an average candle. Something like this here is a very nice spot that you can catch a break, right? Catch the breakout. Even if you just go ahead and take a look at the horizontal through here, right? Start to look. Got like 290 and a half, right? Let's throw that bad boy in. Got like 290 and a half. Up to, you've got this range. I don't know if I want to put this in there, but it's kind of intriguing. Put it like this. That range there, right? This candle peaked over it into the high. There you go. You just got to get through there, right? Climb through. Now, it's really easy to be like, well, we got all kinds of empty space down here. Well, we don't look at it like that. Tilt your head to the left and look at this as a straight line, right? That's flat. Use the trend line. Pull this bad boy down here and, well, you could say, well, it broke down out of support, but that's fine. Something like that is what I think this is where you see the return. Show like this. All right, we're losing some steam on the memes. These charts are getting ridiculous to look at, though. Let's see. How do we look compared to January? Hold on, GME. Hard to tell. It's hard to tell. It's such a different amount of money. Now GME is lower, but for AMC, it's hard to tell. This was a 300% gain back in January. They don't look too good. That's minus 20. Uh-oh. Now, mind you, I sold way back over here. I missed all 100. I missed 100%. But did I, though? How much is that from here? That's 700%? Holy, maybe I did miss out. 600? Let me in. There you go. So 250, and I would have gained another, technically 100 on my 250, but overall that would have been 600. Oofa. Never would have happened. Never. All right, how are we doing on things like steel? Let's see. So we have a Friday play. Now we've been holding off because we had China in sort of introducing themselves to commodity markets. But we've seen that kind of wane a little bit. That's a pretty nice spot for X right there. Going off the support, going into the weekend, get 2 days. Friday usually comes pretty bid. I usually like to get it from the open from Friday. Doesn't look like you need to wait. Pretty nice look. Pretty nice bounce right there. That's already almost a percent off the low. 30. Things like that, right? You can find some swing plays out there. They're out there. I think travel is going to be your other one today. Some of those pulling back like 2.5%. That percent is nothing. That percent means nothing. The candle position means nothing. Those ones are pretty easy probably to get your. Again, they've been trending up. They're just doing their normal pullback. It just looks a little bit different. So charts that look like that, look like this, right? That similarity, you see it across the market. Doesn't mean they're gonna rally off here, but it means in terms of an entry, you have a plausibility of being higher than tomorrow, for instance, right? Excuse me, lower than tomorrow to go higher tomorrow. Semiconductors, I don't really want to mention them. They pulled back a little bit. They've continued to trend, right? They've continued to trend. This has been the exact same move since we've talked about it. They're being priced, it looks like, in I guess you could say a correct way, but there's basically no attention. You can see how small these candles are in UMC. Now, it's a little different when you start to look across the board. TSM is almost the exact same thing, and it's a little bit bigger. And you can see that this move is a lot more violent through here. And so some of these, again, it's hard to get a real gauge. This move looks like it's coming up, right? AMD, for instance, coming off here. It didn't get the meme sort of. It didn't get the meme attention. That's fine. It's not a meme. We'll have to see. Nvidia is still the most bullish. Has continued. So at least our sort of leader has continued to lead through. UMC being sort of the other, with TSM obviously being the largest, but we haven't really seen TSM hold gains very well. So this sector at least it's slowed down in a way that we can gauge the trend over more time, right? And it's not back and forth every week, and we don't really get to tell. I'm pretty decent. I don't see anything on individual tickers that matter. What about on the loss side? What do we got now? Okay, AMC's at 43. BY. Let's see. What do we got? 33.75. What a historical return right there. 62 to 23. BLK dropped right off from the open, so we didn't even have to touch that. All right, let's take a look at volatility. It's actually gone down since the market. Okay, well, okay, there you go. None of that matters. Can we go all the way back to January 115? Let's see. I'm curious. Here's market open. That's definitely not the start of this. Definitely not. We'll see what happens when this opens back up. Boys, this is your chance. AMC's down 30%. This is your chance to get a 30% discount before it goes to the moon. They're writing on Reddit right now. I guarantee it. They're on Reddit right now telling you this is your moment. You can buy in at the low of 43 bucks. Ford is dicking around with that trend line right now. It's pretty close. Pretty close. That looks like some bid. Is this it? Who knew all along you could have just bought a blue chip automobile company? Oh, those of you that want an update on Tesla, let me tell you. Looks the opposite to Ford. Makes a lot of sense. They are opposites. So it only makes sense that if Ford goes up, Tesla goes down, right? There you go. Looks great, doesn't it? That's what they call a Hertz donut. Anyone ever get a Hertz donut? There you go. That's a Hertz donut. you just draw the you just put it like this, right? Where's the maybe this is the hole, but now you have another hole. It's a double Hertz donut. It just looks like a dick. Oh well. Yeah. Tesla's not doing anything for a while, folks. In terms of the consolidation, I mean it's building a long-term consolidation, so I mean you want to call it that. It's gonna be more of this probably. I'm really sure how I would ever draw it. And there's a couple problems, but it would probably be more like this is what you're going to end up seeing. This is the issue right here. And so when you do this, now I'm kind of like, okay. So if this happened, right? Now, there's a couple problems. This downtrend is pretty short. Pretty short. Right? But I would call this a downtrend, so this would be a bottom triangle through here. This kind of works. It kind of works, but it obviously is a little too you're asking too much. You're saying that this consolidated this downtrend. I don't know about all that, right? I'm not too sure about all that. But I mean, this is how if we had to make some sort of bullish case, what it would look like. This is you're asking a little too much over here. I don't really see anything too good happening in here. Don't see it. It's if we just look at it in the short term, it just what has it got? It's got like what is there to offer in here? Like remove the fundamental view of growth. What does it have? How? How do you get out of here? The movement is just gross, right? Kind of there is no movement. That's the problem. One day. All right, we'll see if this is the whip off the low here. Value is doing a little bit better on that. A little bit better. We are green on energy. See, if you just put your money in energy, you're just green every day, and you don't have to worry about nothing. See, energy will never go down 30% in 10 minutes. See, all that matters. It will never do this. Now, AMC looks like it also wants to whip. So, ape stay strong. Diamond hands, boys. We'll see. I would love to see everything whip back up because of retail. Everything looks very similar with that. Not often you get everything looking the same. Obviously, some things UMC continues to come down. I think an interesting question here will be for, you can see RAD there as well, going 2.5%. Will be something like gold down here. This is a good question right here, is how connected is this to the equity market right now? Gold is obviously outperforming recently with its trend. but it took some points off here. This in terms of gold commodities isn't really much, but it is in terms of this trend. You get a whip alongside the rest of the market if the market did whip through. That's like half the question. Bitcoin, there hasn't really been anything to mention. It's still just sort of, I don't know, consolidating around 40. Not much going on through here. It's just consolidating. It's not enough sharpness to call for a breakout. So it's sticking around down there. So it's not taking any flow away. Look pretty good. I like that candle. That's your bot. I like that. This is where you need mega caps to make moves. Now, I've said that over a lot of this time period. Most of them haven't done shit, so, or at least Apple and Amazon have not. The rest have. I think we look to Facebook, right? Facebook is the fortune teller. That looks a hell of a lot more bullish than the rest. There you go. That's literally all you need to know. If this one's going, then in Zuckerberg we trust, right? That's it. Those are quite the candles right there, by the way. What are those? Also, again, just to mention, we're very sensitive to anything political. So, again, everything in the market is really based on timeline when spending does occur. And so most of that's still being argued about. I'm not sure when we're getting updates on some of that, but when we do, we're going to see reactions in the market, of course. It's important that we separate things that happen intraday from things that normally occur, orders that would generally be there, things that are happening because the meme tickers are popping off and there's volatility, and then things that are happening related around political news, separated from normal news, whether it's a company or something, right? And so one is a macro function, the others are micro. It's important that we're not somehow making decisions based on these things that are happening in like minutes of time, right? We need to be aware of what they mean overall, not what they mean in the next 5 minutes, right? So when you get something that sells because the timeline got pushed out a month, that does not mean the overall needs to sell. It's adjusting for time. And so we see this a lot of times. It'll be like, oh, the package is now instead of 2.2, it's going to be 2.1. And it's also only going to touch upon these industries at this certain time. The market just is going to readjust. It does not make it bearish. These kind of things will happen. Biden is going to compromise on everything. He is the most moderate fucking president we've had. He's going to compromise on everything with everybody, right? And so the numbers are going to be different. Things are going to get readjusted. We're going to adjust in the market, just like we're kind of waiting for inflationary numbers. We're waiting to see if the Fed's going to do anything. We're all a bunch of pussies just waiting for someone else to tell us, right, and hand it to us. We've set up some very risk-free bets, right? So be aware of that when that comes in. Who knows when it happens, but it's important that we just continue to press the advantage. And if it's good overall, if it means spending, spending is good. They're going to spend $6 trillion more. You know how much money we've already spent? $5 trillion. It's going to be $11 trillion. That's good. Pretty damn hot. Also insane. All right, the Dirty Dow doing pretty well today. Doing the best so far. Small caps, hard to tell. Hard to tell. we are looking for sort of the regional bank move to continue. In terms of banks, banks are performing very well with energy here. Individual things like Bank of America put a ton of points on, right? Which again, this is what we've been just looking for. So this move here that I've talked about, I mean, we continue to consolidate inside what we were looking at in here. But you're sniffing, you're looking. Not far. How are these memers doing? Ride's still sitting over 11. These charts are just insane. This is what we call an inside bar. But if an inside day, that means this is the end of this trend based on short-term patterns. Inside day. Uptrend, inside bar. Now what? You come down in here. What do you think? 35 tomorrow? Do you break the low of this candle? That's the question. Probably. Now it depends on what the wick is. What do you put in for a bid today? How many apes are left? And there's only so many apes. And you can only have so many hands. DQ up 2% says David. SDC with the apes. C trader. Yeah, SDC is also doing the old volatility play. That's why I opened her up in the morning. It was a little phony pullback. If we just put it into perspective, as I talked about before, just look at it as if it's over here. We've been doing the same thing for a long time. You swing up, swing up, swing up, swing up. Nice little swing up right there. DQ coming off the trend line, heading up to 80, 60. It's going to take some momentum to get out of there. It's been down here consolidating for a while. It had the bid a couple days ago, but didn't make it. Didn't make it. Good guess. Yeah. I mean, let's just be honest. I posted about 20 different charts that were all related to meme tickers and they all went up. Are they good guesses or did I just kind of put every meme ticker that's going to go up because everyone knew they're going to go up because everyone was going to buy them? Because they literally told us. I mean, they actually literally told us on Reddit that they were going to buy them. So if someone's telling you that they're going to do something, this is like me buying AMC here and acting like I'm doing something different. I bought AMC back here, Cinco de Mayo. That they were already telling us they're gonna go buy the shit out of AMC. It took 2 weeks. It took 2 weeks, and they started buying it. And I posted every fucking chart that was related. All right, genius. I'll tell you. Look at all these charts that I got. I posted BB April 23rd. Oof. This guy. Look at BBBY. Holy, a week before it did this? Oof. This guy's onto something, I'll tell you. He's sniffing them out. I wonder how he figured some of those things out. I'd love to know. That sounds like, again, everyone did the same thing. That's half the problem. All right, by the way, 4 days through the trend line, which is important. It is important. This chart is forget the memes, guys. Forget the memes. Who gives a shit? This is an actual big company that actually does stuff. Look at this move. Look at this damn move. Now, we got involved on this candle here on the 20th, right? We got involved on this candle. Just for those of you that weren't here, to reiterate, basically, we considered Ford an EV company, or we're like translating it to one, right? And the problem was that EVs have been very bearish, and everything has been priced for in the now, value sort of companies that are going to gain right now. Growth will gain in the future, which is discounted. Then really what I did was just taking a look at price. Price shows that that's not the case. Price shows that Ford is actually very bullish and strong. So we look to get involved, remove the EV bearishness. It's an EV, but give it the value component that's truly what the chart is, right? It's very much a value chart. And when you put sort of the bonus of being a growth company, the effectiveness of having value right now, those things together is exactly what every portfolio wants, right? You hedge each other with those two different areas of equities, and you ride it. And here you go. Now it's bursting through the trend line. You have another trend line coming up here at 16. Now that's a half a cent up to there. That's almost 4%. I do not, I don't doubt for a second that it probably reaches there. It's going to break right, it broke right through the trend line. It's going to go right up there. That's it. I really like that chart. And again, I think it's the effectiveness. It's so important to be able to change your mind. And it's not even just being wrong. Of course, it's so important to be able to be critical of being wrong and change your view and change your mind. It's really hard when it's not that, right? It's really easy to see that you made a mistake, right? What's really hard is when you have a bias and it's been working and your bias has been able to pay profits. And then changing that bias to then make more profits than you were making is fucking hard. It's so important to do it, especially when it's about price. And that's why the only thing I say is just look at price. It's the only thing that matters, right? Price is the only thing that matters. Now, saying it in hindsight, but I said it back here, right? And you can see what we've done, and I think this is my favorite chart, easily my favorite chart. This is such a drastic move. It's so drastic. It's so much value, too. This is now, what is this? I mean, like obviously compared to some of the others, it's not. Okay, 62 billion. There you go. It gained quite a bit of billions, I'll tell you that. Is it more than AMC? Let's take a look. AMC's 25. No, you're wrong. It's a few AMCs. Now the question is, could you make more on AMC or Ford? I don't know. Okay. Nice fun morning. Little whip. Probably won't continue. Probably gonna hang out, do nothing all day for lunch. Okay, let's go over, let's start this discussion. All right. So, let's just go back. Let's go back to in here in April on Moderna. I posted this chart, right, back in April, and I started talking big ideas. We were talking about big ideas in the pharmaceutical side, sort of the bio side, for the reason being that the government is sort of signaling, maybe virtue signaling, that they're looking to be more preemptive for pandemics, right? And we've seen significant spending coming out from the government. And so one of my big idea sort of focuses was that it seems like the government is going to just start to fucking pay these companies money to go make, to do R&D for things that have not happened yet. Now, you can't make a vaccine for something that doesn't exist yet, but you can, you can create processes and stay creative and nimble by having money, and you sort of impose some sort of control as the United States government over something like Moderna, which is very new because of COVID, right? Some of these companies have been around, like J&J, which is a very different situation. But when we look at things that are COVID related, these charts had already been priced for COVID. They had how many vaccines they're going to have, how much money they're going to make, And so they were priced, and we had a high put in, right? And we sort of knew exactly where that would be, and that's literally it. That's all they did. They made COVID vaccines. That was basically it. And so some of the idea was that if this high gets broken, then it means that they're going to be making more money than from COVID. And that's a very different situation for something like Moderna here, right? This is very much only because of COVID that these prices went up and that they matter. Mind you, this is a $79 billion market cap company. That's more than what we just saw on Ford, right? Moderna is fucking massive right now. And so when we look at something like this now, mind you, you have all the others, right? Pfizer, J&J, etc. We saw this trend come out of here just as sort of we expected, and it was getting hot in here, right? This sort of idea, I think I was getting very, tingling on the idea that the government is about to fucking just whack us with some more spending. They're like, fuck it, we're going to make an office. I still think that's going to happen. Why? Because look at this move in here. Look at the move that's come again after the IP. Now, this is why it's important for us to realize that news and things that don't matter, if you price them correctly, right? For instance, the IP lifting, I thought, was good. It's a good decision because you're going to be able to make more vaccines, save more people. That's a good thing, right? Obviously, some of the stigma was that if you let other people make someone else's vaccine, then they don't directly get the profit, right? But this is not about profit. It's not about money. It's about saving people, right? And so, duh, obviously we're going to do that. It really makes you think then, why is this chart, look at it right now, right? It's bulldozing through the high. It's all time. It's up 3% today. Look at the trend. What is that? Now, over here, I kept talking about, what are we doing? We having a debate, right? We're having a debate in the market. Do you think the market's made its mind up? Looks like the market's made its mind up. That's a lot of green. That's a lot of green. It's at the lower end of my target for the exact same day, which is very cute. That's pretty cute, right? That we got it basically through here, but we actually really put it on through here. It's pretty cute. It's so important to realize that this chart is at its high. The only reason this chart would go past its high is because it's going to make more money than from COVID, in that there has to be some sort of spending coming through. At least the market is pricing it, right? We're speculating that that's the case. Now, when the IP thing happened, we saw J&J actually rise, right? Now, during this time, the Moderna started to come back up. J&J started to curl back over, right? And so some of these here are showing differences between those companies that have been along for a long time and that probably are not so much going to get government focus in terms of funding. Where we've seen this is on the industrial side. The infrastructure side. We know that there's direct funding going to infrastructure companies, and so those companies are being speculated on and appreciating accordingly. That Moderna chart looks exactly like those. It looks the exact fucking same. And so then we look at something like J&J. J&J is not moving in that way. It's moving like a dog, or it's moving like sort of a tank, right? It's just sort of chugging along and doing its thing, but not reacting for the same forces. And so it's, again, this sort of pricing, this is speculation that there is funding coming, that there's some sort of funding coming, or that there is some sort of, I would say, program that's going to come out that is basically going to be a we'll never let this happen again sort of situation, right? And that we're going to have things ready and we'll be prepared, right? The private sector can't do that on its own. That they don't really do that, right? When the R&D is going on, they're doing things for profit, right? The government isn't doing it for profit. They're doing it for their citizens, right? But these companies need the money to be able to do it. And so you put those things together, that means higher prices. This move is just, again, it does beg some questions. It begs some big idea questions, and we'll see if it continues. I mean, it's in the all-time high right now. So I do think that we will see things, and whenever the timing is, I think that we're close. We're pretty close. Right? Pfizer, for instance, not even doing it. Right? Why? Because it's just different. Right? It's different. Company that's been around, they're already drug maker. Right? Can't be manhandled by government. We need companies that can be directly influenced. All right, all right. GM following Ford again. It's the same chart, so I usually don't mention it, but it is the same chart. It's shallower. It doesn't move as much. Obviously, it's moving more today, trying to catch back up, but it's this lagged sort of Ford chart. We've seen it very similar. Right. This move is obviously just a lot better because it's so much sharper. I'm gonna go to 16. You'll see. BJ is looking pretty good. BJ just went through 47.11. That's a nice range in here. A quick move coming. Retail stores have been a lot of fun. Obviously, WBA Rad got this whole sell move came from, remember when Amazon announced that they're going to be making pharmacies? Again, news. There's an overall effect. GE, let's see if we're sort of flagging through here. We'll see if we're about to break back out through there. I would say today, tomorrow, we start to see some of these charts come back out of their consolidation. This has obviously been a very, very significant move that we talked a lot about over here. I can probably get rid of these trend lines. We'll keep them actually. We'll wait to see what happens over here. But yeah, we're waiting for those moves to get going again. Things like the big boy healthcare as well, right? United, Anthem, very similar, very similar. Looking for this consolidation to get broken out of. Oil, oil, oil. It's just an energy story, I'll tell you. Big boy oil doing a little better, huh? Halliburton at the trend line. Now, this also lines up with the high over here. Actually, very interesting spot right there. We should be back onto this. So again, this came down. Just transfer this over here now, right? Boom. This is the break here. Throw this bad boy in here, right? Kind of where we are. That breakout right there would be significant, and we are looking for energy to break out of this consolidation right here. So a lot of these charts are lined up pretty well. This sort of consolidation that happened in here, right? Now the average has sort of climbed through there, but it hasn't like made some sort of, I mean, it did break out, but it hasn't made sort of a start to a trend yet. Some of those charts might be ready to get this average moving further for sure. We looked at DQ earlier. Everything's a fucking oil company. Um, for Lumen, we're on target. I have two. We reached my target on the previous chart, right? On the previous wedge through here, we reached the target. The update has been doing very well as well. We're right on the trajectory. Now, this is a lot longer. Market's going to need to keep trending, but looks like we're having a very nice start through here. It almost looks like we're probably going to come up into the trend line sooner than later, which again for continuation patterns you want to climb back into the trend channel. Probably too many lines for most, you know. A lot of good looking charts. A lot of good looking charts. MP was has been pretty good. I posted on this day back here if you guys remember. I posted two charts that were like this. Have been very bearish, but posted pennants and flags out of this. These little short-term little patterns like this, nice little swing trades, right? Far and few between, but when you get something like that where it's been very bearish, trending down, and then it consolidates at a low in a short-term sort of sharp way, then you take it when you can. That's been a nice trade. That obviously reached the target pretty early, but decent enough. All of our weekly charts still looking pretty good too. We had things like Roku, for instance. Let's take a look at a chart like that. This is sold down from the start here, but again, this is a fucking weekly chart that is very long, very long. This kind of start, nice entries being produced. If we look at it on the actual chart, nice entries to go take here. A little bit of an outside or an engulfing candle here, but doesn't matter. It doesn't matter when you're talking about 14 weeks of time. All right, how are the memers doing? BB 20%. AMC been fluctuating at 54, down 14%. Honestly, just looks like the market, which again is always so silly, but literally looks like the market's candles. They're the exact same. So, yeah. Laser. Really makes you think. Laser about to break 25.5. See ya. 25.5 is broken. Nope, rejected. Okay, we'll wait. We'll wait. We've looked at this chart before. Obviously, brand new. Now, no, there's not really any similarities. So, we've looked at a lot of auto parts charts in the past. They just sort of offer this volatility to them, I guess, that allows for us to swing trade pretty easily and be technical on them. I don't know if there's anything actually there that matters. They're just so related, I guess. I'm not really sure what the whole sector's doing, but we obviously knew that there was a lot of things that happened. It's like when we saw the inflation numbers, and the highest inflation was in used car sales. Why? Because all the rental car companies sold all their cars the start of COVID because they didn't know when we'd go back to normal. And now they're all buying their used car back. And so all those used cars prices went up significantly. So it looks like inflation went up a fucking ass load on used cars. And so it's like, oh, okay. And so that obviously generates a lot of value on things like auto parts. And we saw that to start with COVID anyway. But it's continued. Nice start there. Like a lot of things are coming out of their take profit. Again, most things put a big points on yesterday, so still retracing a little bit. Not retracing, but taking profit on a historical average. Most of the red is around a 1% loss. At least on the loss side. Mostly growth. Mostly growth. This is not getting any attention. Apple. Looks like it's going to be a pretty boring day from here. Pretty boring. Depending on what the memes do. The memers do. But they're also trading like the market, so looks like that's about it, folks. That your action is gone. Which can mean that it's today is a lot more market participants and less the overall market participants on average, and not just retail. Just trading like the market so much. Looks like the SPY candles, which is probably the best thing for it. Probably hold up here a little bit longer. Imagine if AMC just held this value, just sat here. If they don't halt it too many times, then you're probably good. Half the problem is the halt. Causes panic. People are Googling, how long is this halt for? How does this work? 15 minutes? Holy. 5 minutes? Which one? They shouldn't be halting it anyway. There should be no halts. There is no news. The news became pre-market. In my book, you should only halt price if new information just hit the market and we need time to digest it. If that's not the case, you let things go. Otherwise, you get these problems where you halt it and then things get... The spread is disgusting because people don't know where it's going to open back up. You're opening something midday and then the spread's fucked and then things go down like, 10. They go down 10 times as much as they were going to go down. Or up 10 times as much. Not a good... I think that was half the argument retail made back with GME, but they should have stuck with that one. That one makes more sense. What are you halting us for? There's no information. We're literally just fucking stupid. We're just stupid. Stop halting us. Why? Ride is holding, which is nice. Was not sure how that move was going because we had a very large upper shadow, but that's a very nice move to start. And again, big range through here. It doesn't need to all happen at once. 11% is good enough for me today. It's gonna be completely fine. Call it good. Ford is at 15.75, so 25 cents off 16, pretty close. Does look like we're gonna get that trend. If it does climb into this trend, then yeah, see ya. Yeah, it's gonna be a lot easier to hold that. Even in here is fine. A little broad. I don't like things that get broader. You start to gain, your spread gets too wide. You want to have a nice range, trade between ranges. Looks like energy wants to do more. Hal is trying to break through that thing. Give me more. Give me more. Banks, energy. I just want to keep saying banks and energy for another year, please. How's BA doing off the low? Coming off. It's coming off pretty hot right now, it looks. There she goes. Okay, looks like we're gonna. So again, we saw this across the board. Some of these candles that pulled back down in support, the great candles. BA has obviously been a very nice move as well. We talked a lot about that candle from 2 Fridays ago. These are good charts. These are good charts that again will be slept on because of what's going on right now currently. It's really easy to forget about the charts that actually pay well, even though BA has been a dog forever. We've taken it on the breakouts and it works. So, for a little extra risk. Hmm. Natural gas. I don't really have anything to say. Can't really update this chart. There's nothing here. Compare. Basically the same. I have no clue. I have no clue. Correlation between natural gas and then the overall energy and oil market is just blah. Sometimes they're negatively correlated, sometimes they're correlated. I mean, at this point, everyone just accepted that America's dumping fucking natural gas on the market. So, I mean, I think everyone's just kind of, it's just a part of the market now. So, I guess they should be correlated. They keep going up together. So, good sign. Clean energy. Blink been gaining past few days. Hard to sift through those that are meme-ish. Blink is 100% a meme. Yep. Yep. Blink is 100% connected to, again, when we look at all these growth companies that were down at this low, you can look at, I have a ton of charts that I just posted that are from this sort of, this very bearish downturn into this pivot off the low going to the upside. This all started around the exact same time all the meme stocks started climbing back through. These have nothing to do with clean energy. That's the problem that we've been talking about for a few months now, is that clean energy is, so clean energy is growth. Growth is being discounted, so everyone's trying to go into value. There has been no sign that there's any reason why any of these companies that don't really make money yet would all of a sudden be doing something, right? And so when we look at something like the overall solar market, right? It continues to come down. So why is it that things like Blink and Plug are gaining bid right now when the entire clean energy market's going down, right? Oh, let me tell you, because remember how these were sort of the big meme tickers back in COVID, right? Coming into January. Oh, this is January over here. Yeah, these are 100% all meme moves, and that's why they're coming out of here. Retail came back. I shouldn't use the word meme for everything, but retail came back, right? And we talked about it, that retail was going to come back. And so we were going to look for charts that retail wants to trade. Blink is 100% one of those, just like Plug, right? We knew retail was leaving Bitcoin because Bitcoin was being sold well before this, right? Bitcoin was being sold way before this. You go back to this chart, the capacity. There you go, right? Bitcoin was being sold from the beginning of May. So you have market participants here that are re-entering as they sell their Bitcoin, right? And crypto across. And they were coming back into the equity market. It's correlated I mean, it is correlated. I don't really want to use correlated, but it is correlated. This coming down in equities going up on those tickers, right? It's 100%. And so, uh, are they buying it? So here's again the question: are they buying this because the future outlook of these companies is good? Are they buying fundamentally, or are they just fucking buying shit? Did they buy Bitcoin because of the great future outlook that's going to have in terms of a currency that's going to take over the world? And is AMC fundamentally a great? Like, none of these things fucking matter. Right? They're not going to hold it. They're going to be in and out. Doesn't mean there's not points to gain, and that's why we were looking to be hungry on a lot of these tickers. And but it is important still that we know why. Right? We do know why. We absolutely know why. Right? That's why I've been trying to find more and more JMIA. Right? Remember this one? This was only like 450% through here. 500. Yeah, it's the same thing coming out of the low, right? Oh, same date, right? And so looking for more, but this hasn't moved as much, right? So I was like, you know what? This has not moved as much. There is a pattern here. This is another one, right? Oh yeah, we're in the middle of nowhere. It's gonna move pretty quick. Space came off the low. That's what I was just telling you guys this morning. Is this because space all of a sudden this downtrend meant nothing and we were just all wrong? Was everyone in here wrong for selling? Or is this just retail buying shit? Looks like retail buying shit to me. Which doesn't mean it's going to go away, right? It doesn't mean it's going to go away and can't hold it, but it's definitely yeah. We know why. We know why. I wonder who's buying that. Who is over here? There's a lot of examples, right? There's a lot of examples. And I think that's why it's so important to realize, when I say that it's not just one. It's not just one ticker and not one, it's not just Reddit. I mean, it is Reddit, but it's very spread out and it's impressive. It's an impressive amount of money, but when you then look at the overall, it's a very small percentage of the actual sort of traded volume and also the total monetary value, right? Maybe I shouldn't say volume because the volume numbers are very high. The thing is that the volume numbers are so high on these tickers because they get bought and sold instantly. Someone buys it and then they sell it, right? So that counts. And so they keep trading it back and forth. It doesn't even move. Like today, it's barely moving today. But you're going to look at these numbers right now. It's look at these numbers. Right now it's at 169 million of shares traded. And it's in the high 40s right now. It's at 355 million yesterday. Today it has barely done anything, and it's still got half the volume, and we just started the day, right? Because it's being traded back and forth nonstop. And so that volume is not actually wealth creation, no money being created, right? So, and we can, the reason we look at that is because then we can go look at those other charts. So for instance, that blink chart, and you go look at that blink chart, and all of a sudden you start to find a very similar stories with the way things are being traded. And we know how this group of people trades things, right? And so you go from very low volume into this higher capacity of trading that's very timely. It's very in, out, that's still causing moves. And so you just know that it's a lot of rushing in, a lot of rushing. And you see it everywhere. Things are holding pretty well over there so far. So yeah, I don't see much else happening during the day here, folks. It's very, very normal looking. Besides again, like energy continuing, banks continuing, which is like the most usual casual story ever, that these charts will just continue to trend up. I mean, I guess that's like duh, but that's all that's happening. In terms of memes, again, who knows? There is no answer. There is no answer. I think I'm gonna leave it there because again, this is where I can already tell I'm gonna get into this mood of we start to look at things and try to find things to do, but Like I said, there's nothing else to really do on those tickers that we've already looked at on the meme side, but we've looked for new ones. So we're looking at some of the new charts for some of the gains. We had Ride today, but a pretty nice start on. It's still at 9%. It put quite a bit of points on. Um, pretty good start. Laser also putting a pretty nice gain on. Now this got rejected at a level. Uh, Again, China showing how technical some of these charts are. I mean, everything is being traded technically right now. So keeping that in mind going forward, there's really nothing else you can do for trading now. I don't think I think specifically in the way we're trading right now, it's very open focus. So we mostly trade through open anyway, but right now it's really easy to go. You look at the last few days here, and you look at lunch. There's really no way to do anything, and it's the way that the volume works. We have such heavy volume at the open. Even though there seems to still be a lot of volume during the day, it's because people are just fucking trading it back and forth. They're not actually participating really in the sort of the mindset that we are, and so it's really easy to get caught off guard and go buy shit for no reason. So other than, again, you can fucking day trade all day, doesn't matter, scalp, have fun. I'm just sort of excusing myself, so I don't want to do it. You won't find me in the trenches today. Before we take a break for lunch, I do want to mention again, this forward chart going up to 16. It does look like that's going to keep appreciating. So we saw it break through the trend line this morning. This, I mean, just yikes, boys. This is my favorite chart easily. We'll watch this and see by close if it comes up to here. I think it's important to be able to figure out what exactly the moves are. And so when you look towards like a prediction idea, or at least have a feel on a chart, it's important to keep getting confirmation that it's moving in the same way you think it is. Reason being because we're a part of this chart, we want to be able to transition this properly. Do we transition at that 16 point? That's my question. Or do we transition here going into lunch? These sort of questions are important. Do I want to take this profit now? That's a big question, right? And so again, we took the trade back here the 20th, transitioned here. Now this move, it's not as much of a move, but 10% again is something to think about, especially if you came down through here. You're looking at quite the gain, and this overall trend is very sharp. Can it continue? Does it consolidate? These are things we don't want to overdo it, and we don't want our opinions and biases to affect decisions. We want to just see the price, keep getting confirmation on price, see if it's moving in the way we think it is, and react accordingly, right? So we'll see going in here. If you're in this position, there's definitely nothing wrong taking profit into resistance, right? And then looking for our opportunity to re-enter, whether that's it pulls back into support or it opens up on the trend line or something, right? We have a big channel in here that we're sort of looking for. There's the best thing to get out of our own way, right? So that's sort of what I'm looking to do right now. That's all I got, folks. Let's take a break for lunch. Very bid. I mean, a very, you know, it's not a very bid day. It's very bid in a lot of areas that we're looking at, but it's also not. We actually see a lot of take profit from yesterday, which is the most obvious thing in the world. When something does 10%, it's probably going to take a little bit of profit. And so a lot of those are going to take some time. And that's why we're really looking into from today. You see the bid on the charts that we're not putting big gains on, putting the moves on today. And then tomorrow, most likely those charts that took profit today off of a big move yesterday, we'll see if they continue or not, right? And so that's what a lot of the story is here, is this sort of back and forth of, okay, do we continue? Are we going? The market pulled back a little bit. Very nice buy opportunity. There's a lot of different things to maneuver through, and they kind of all come back to the same word of just buy. And so this is why we've been setting up a portfolio and not just entering random shit every day, right? And just buying meme tickers every day. And because you want to be in a position here where you can continue to capitalize on it. Buying every dip has capitalized very well. Why would we do something different here, right? So it's the same thing. Came to support, buy it, and that's it. And so, but probably not during lunch here. So you should have already bought. You should buy tomorrow. Buy on the weekend. Again, but you can't. So I'll see you guys this afternoon. We'll I'm gonna remember. We'll remember where the prices are now. We'll see how much things have changed. Good luck. Good luck to the apes out there. Those of you that are diamond hands out of your mind. Say hello to your ape brothers. I'm not gonna be there, so ape stay strong. I'll see you boys later.